central bank is cutting its interest rate. Now, they already were giving money away, right? They're cutting it to zero, just about 0.05. That's 5 basis points. That is basically nothing. You thought it was bad here at 0.25. 0.05 from 0.15. They have increased the reserve amount to a negative 0.2 from a negative 0.1. What does that mean? That means if you're a central bank, like here in America, where in America we have trillions of dollars sitting in reserves at the Federal Reserve. In other words, this is money that the banks are receiving interest on for keeping that money in the Federal Reserve. Okay? And they'll use it when they need it. That's grown significantly over the last 3 years. Nobody seems to care about that. But we live in an economy, in a world economy, global economy, where we need to be lending and borrowing and we need credit throughout the markets. That's what makes our economy go around. Okay? So we're not having that. The ECB, if you're a banker in Europe and you have reserves, you actually have to pay the central bank to keep your reserves. You don't get interest. You have to actually pay them interest in order to keep the money. Now, the goal there is to punish bankers for not loaning the money. The idea here is that we will spur the economy. It's pretty much experimental. There's a couple countries that have tried this. As far as I can tell, it's had a minimal effect. And the idea here is to get the flow of credit back out into the markets to spur the economy. But like all central bankers and all politicians, they're missing the point. They're missing the fact that you can do all the incentives you want, but I can't lend money, if I'm a bank, to someone that doesn't want the money. I can't lend money if there's no demand for the money.